Hey there, it's Trisha with Easy E-mini Trade, and I want to show you a couple breakdowns from Wednesday and Thursday last week. I wanted to show you a losing breakout trade that I took, and I'm going to be doing a webinar tomorrow at 4:30 p.m. Eastern. So if you're interested, just go to my site, easyeminitrade.com, and click on the tab for the webinar for tomorrow, and all the information is there. Okay, so this is the NQ from Wednesday the 11th. Was Wednesday the 11th? Tuesday the 11th, excuse me. And I wanted to take a breakout above this bar here on the 5-minute based on that tail right there. And the reason I liked it was you can't see the volume above these bars here on the 5-minute or even the 15-minute. So you have to go back to a chart where you can look back far enough to see what happened above that area. So let me just show you here real quick. So here's the 60-minute chart, and I can see more information, right? So this is the area I'm looking to get in. It's around 62.50. So let me just draw a line around 62.50 area just so you can see the volume to the left. So looking over here to the left on the 60-minute, you can see that if I take a trade in that area that I'm looking off my 5-minute, that I do have opening to the next high volume area of, let's say about 8 to 10 points. So, so I do have room between the volume nodes here to take the entry. So I take the entry, and I didn't use a big enough stop, and I got stopped out. So I do get another opportunity on the next bar, which is right here. And I'm drilling down to take my entries off a smaller chart. I'm not actually taking the entries off the 5-minute. Usually what I'll do is I'll look at a smaller range chart like a 6 or an 8 and take my entries on there. So, we had a couple entries earlier down here that were not breakout trades, but this is specifically for the breakout. So I can get in above the next tail, which would get me in above at 66. And obviously you can see that it does work out. And what I want to point out on the 60-minute here again is that when it does break out, it manages to trade up to that next high volume area up here. So obviously it works out in a big way. And the big breakout didn't happen until after like 11:30. So if you weren't sitting at your computer around lunchtime, then you likely didn't get it. But here was another opportunity here if you were sitting at your computer. Another tail right there. And we have the opening in the volume because I just showed you on the 60-minute chart. And so you can take it again there. And I'll go into more explanation during the webinar as to why I'm looking for those tails, and I'll be able to spend a lot more time on it. Okay, so now we're looking at Wednesday the 12th. So here's a 5-minute chart, here's a 15-minute chart, and you can see on this 5-minute chart we actually get two bottoming tails. This one's a little hard to see because it's off the open, but it's right there, and right where that dashed line is, I have that's showing me where the open is. So I could go ahead and take a breakdown under that area as long as I have confirmation of open volume area. Or then you can see on the next bar we did get another bottoming tail. And generally it's not just the bottoming tail. You want to see the body of the bar pushed up towards the upper end of the entire candle. So you can see that one's kind of halfway, but either way, as long as you get confirmation with open volume, you can take it. Then ideally you could see on the 15-minute over here, you wind up with a bottoming tail after that first 15-minute bar. So that one looks pretty darn good to me, just because obviously, like with anything else, the higher the time frame, the less noise you're going to hear. So as always, though, I would still drill down and take my entry off a smaller chart. So if you got in under this bar here on the 5 minute, the opening, it worked out for a bit. Let's see, you would have got in like 86.50, 86 and a quarter. So it worked out. It traded down to 77. So let's say, maybe you got like 5 points out of it. If you got in under the next bar, you would have been filled under this candle, you would have been filled on this bar, and that would be the same candle here as the 15 minute. And then obviously that worked out in a real big way. If you didn't get in because of that tail, then you had another opportunity right here to get in under that bar, and you would have been filled right here. Looking at the 60 minute though, what I will point out is in the area that you would look to take the entry here, and let me just scroll back so we can't see any other volume except that up to that day. Okay, so that's about right, I think. Okay, so right around there. So you can see looking to the left here, if I just draw lines on the area where volume areas start and end. First one, I'm going to get rid of that. So you can see that we have some volume here between 75 and 68. So those trades that were taken based on the information we got off the 5 and the 15, we'd need to be aware of this area that it might get stuck in between this 75 and, let's say, actually it's probably even a little bit smaller than that. Let's see, 71. So maybe like a 4-point area where you might get stuck. And then you can see that volume doesn't build up again until this area right here at 62 and a quarter. And then you can see it down here at around 54. And then you can see it down here, let's say around 47. And then you can see it gets pretty high here around 40. And so you would just be aware of all those areas on the way down where price might react. Okay? And only you can determine if there's enough room to try it or not based on your risk reward. Whatever you determine how much you're willing to risk. All right, you guys, so I hope you find that helpful, and I will go over this in complete detail tomorrow during the webinar. So there's still a few spots left, so if you're interested, sign up. Okay, have a great day. Talk to you later.